Alrighty. So in today's video, I'm going to be sharing with you a consistently profitable SPY option strategy that I have been using for quite a long time right now, and it's been doing pretty well for me, right? So what is this SPY option strategy? Well, this is none other than the Jade Lizard. So first off, if you are familiar with the Jade Lizard or you too have been trading the Jade Lizard, then what you'll probably realize is that if you were to trade this strategy on SPY, then it's going to be pretty capital intensive, right? And what I mean by that is that the buying power required for you to put up one of this strategy on SPY can be pretty high. So the question is, I get a lot from quite a number of people is that how can you actually trade this on SPY if you have a small account? So I'm going to show you a workaround so that you can actually trade this strategy if you have a small account and risk even as little as $500 per trade, right? So let me start off by just talking a little bit more on what is the Jade Lizard. So first of all, the Jade Lizard, this name is basically coined by the folks at the Tasty Trade team. So the Jade Lizard is actually a pretty simple strategy that consists of two separate strategies, right? First off, you have a short put, and then you have a short call spread, also known as the bear call spread. So when you combine these two together, how it will look like on the P&L graph, it basically is like this. So one thing you will notice is that there is no risk to the upside, and it's deliberately crafted in this way, right? So you might be wondering right now, and some number of people have actually asked me this, is Davis, why should I trade this Jade Lizard instead of just trading the short put by itself, right? And it's a good question. The thing is that these are two different strategies, right? The short put is much more bullish. So if the market keeps going up, then the short put will take the profit very quickly. But if you're much more neutral to bullish, then you might want to put on the Jade Lizard. So there are two very different strategies trying to capture different moves in the market. The whole idea behind Jade Lizard, at least the way which the Tasty Trade team have designed, is to try and capture it somewhere in the middle, right? Because this is where the biggest profit will actually lie. And the thing is that the market doesn't actually go in a straight line, right? It always moves in waves. And we are not always sure whether the market will keep going up all the time. There'll be time where the market can keep going sideways or maybe have a slight pullback. So in those cases, the short put may not do that well, but the Jade Lizard could do much better, right? Because the whole idea down here is to try and capture it somewhere in the max profit zone, somewhere in the middle. So the way that they have designed this strategy is whereby this short call spread, they know that based on a certain delta that they're going to choose, which I'm going to share with you later on, there's a certain percentage that it will not go above here, right? So if they know that it's not going to go above here, the chances that it's going to stay below here, they want to try and capture the credit from both these two separate strategies, right? Both from the short put and both from the short call spread. And that's where you get it in the middle down here. So how do you actually construct the Jade Lizard properly? Well, the proper way is whereby the total credit has to be more than the width of the call spread. So as you can see over here, the right hand side, this is the call spread down here. So if the call spread, let's say as an example, is $3 wide, then the total credit that you want to get from both the call spread and this short put down here has to be more than $3. Because when you have more than $3, anything past the call spread of $3 basically will be the spillover. So basically, let's say if you have $4 in terms of total credit, then past this point down here, the call spread, at least there's still a $1 to make, right? So that means if you, let's say you're wrong on the call, whereby the market is going sideways, if the market shoots up, at least you still have some profit, although it's not that much. Okay, so this is the whole design of the Jade Lizard, which the Tasty Trade team have created. So I'm going to share with you some studies as well, which the Tasty Trade team has done on the Jade Lizard. So as you can see over here, this Jade Lizard is done on SPY, where there are two different exit points. The first one is they hold all the way to expiration, and then once it expires, they put on a new trade again, right? And the other one is at 21 DTE. That means once the trade has left about 21 days to expiration, they exit the trade and then they put on the new one again. And then once that new one reaches 21 DTE, they close that trade, they put on a new one again. So it's a very continuous kind of a trading, right? So as you can see over here, if you were to compare hold to expiration versus exiting at 21 DTE, you will see that the annualized ROC is actually higher if you exit at 21 DTE. At the same time, your largest loss is smaller as well. So the trade-off is that you have a slightly lesser win rate, right? As you can see, 81% versus 86%. But I think it's much worth it because at the end of the day, you get a higher return, and then your losses, at least your average losses, are going to be smaller as well. So as you can see over here, the conclusion is that managing at 21 DTE can improve the ROC and reduce downside risk by sacrificing a small success rate. Over here, you can see the P&L graph, right? And this is a pretty statistically significant data set because it dates all the way back to 2006, right? Even back then when there's this financial crisis at 2008 and also the pandemic at 2020. And over the long term, right? So this is the key you need to understand. Over the long term, this strategy can be profitable if you do it right. Right? So if you were to trade it maybe just for like 30 days or 60 days, it's possible that you get into a drawdown, you're probably down, right? So it's important to know that this strategy is meant for the long term. So as you can see over here, if you were to compare 21 DTE versus holding to expiration, 21 DTE still outperforms than holding to expiration. At the same time, you also reduce the risk of early assignment because if you hold all the way to expiration, then there's going to be a much greater chance of you getting assigned compared to if you exit at 21 DTE. Now, at this time, you might be asking, but Davis, the Jade Lizard on SPY is too big for my account size. How can I trade it? So as you can see, this is the Jade Lizard on SPY, and if you take a look at the BPE, right, so that's basically the buying power effect. The capital which the broker holds for you to put on this trade is around $8,500. So it's pretty capital intensive. So the question is, how can you trade it if you have a much smaller account size? Well, the answer is to just simply trade the defined risk version of the Jade Lizard, which is what I call the Jade Iron Condor, right? So the Jade Iron Condor, well, this is a name that I came up with. So basically, it's very simple strategy as well, right? There's only one difference compared to the Jade Lizard is that instead of putting on the short put, you put on the short put spread, also known as the bull put spread. So you have this long put down here. Basically what it does is that it just defines your risk to the downside. So even if the market really crashes and goes all the way past your short put spread, you don't have to worry because, hey, you've already got it defined right at the start. This is different compared to the Jade Lizard because if you have the Jade Lizard and the market really crashes, then you really need to be on your toes, right? But for the Jade Iron Condor, you don't really have to worry because you already know what your max loss is right at the start. So the first part is the short put spread, and then you have the short call spread similar to the Jade Lizard. So as you can see, if you were to put these two together, then your P&L graph would look something like this, right? And as you can see, not too big of a difference compared to the Jade Lizard. Only difference is that you have this long put down here that defines your risk, and you can see that the max loss can be as little as only $482. So if you have a small account, you can definitely construct the Jade Iron Condor and trade it on SPY. So there's a way to properly construct this as well, and the same thing as the Jade Lizard. The total credit that you receive from the short put spread and the short call spread has to be more than the width of the call spread. And again, as mentioned earlier, I'll be going over to the option chain to show you exactly how to construct this. So as you can see over here, these are some of my past trades that I've taken on the Jade Iron Condor on SPY. And as you can see, it's been doing pretty well, right? So the win rate is also very similar to the Jade Lizard. And that is not to say that this Jade Iron Condor will never have losses, right? As you can see, there will be losses. And for the most part, the losses on average can be bigger than your winners, right? Because that's how the way short option strategies are designed, right? Your reward usually is smaller than your average loss, but then your compensation for that is a higher win rate. But as long as you continuously put this on, then you're going to be able to let the edge play out in the long term to let you see positive results. All right, so let's head on over to the option chain. I'm going to show you how to construct both the Jade Lizard and the Jade Iron Condor properly. By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. Okay, so we are in my Thinkorswim web platform right now. So the first thing we're going to do, go to the option chain on SPY, and then I'm going to select the 57 DTE one. You can go for the 43 one if you want as well, right? So anywhere around 45 DTEs should be fine. And then you want to go all the way to somewhere around 20 deltas, right? So 20 deltas is just a rough guideline. You definitely do not have to stick to 20 deltas all the time, right? This is not a hard and fast rule. So if you're a little bit more conservative, then you might want to go for a lower delta. So as you can see over here, this column here tells you the delta of the strikes. So if you're a little bit more conservative, you can go for the one that is a little bit lower in terms of the delta. Or if you're a little bit more bullish, right, a little bit more aggressive, you want more credit overall, then you can go for the higher delta. So in this case, just for this example, I'm going to go for the 533 strike price, which is around 20 deltas. So the next thing we're going to do is to construct the call spread side, right? So the call spread, you need to know what is the width. So what is the width? Basically, you can take a look at what's the credit that you're receiving here. So you can see the credit is about 5.69, which means to say that you can at least have a 5-point wide call credit spread. So remember, the total credit that you receive, you want it to be more than the width of the call spread. Right, so let's go to the call spread side, and then for this we are going to choose somewhere around, say, 35 deltas, right? So this is basically a guideline also given by the Tasty Trade team, and again, you don't have to definitely stick to 35 deltas all the time. If you're a little bit more bearish, then you can go for a higher delta. A little bit more bullish, then you can go for a slightly lower delta. So I'm going to use the example of this 35 delta down here, which is the 582 strike for this. Now, as you can see over here on the left hand side, there's another column that calls the prop ITM. So basically what this is it tells you what's the probability of this strike price being in the money at expiration. Right, and as you can see, it says 32.57%. That means there is about a 32.57% chance that the market will go above this strike price past your short call spread at expiration. So that means that 70% of the time, roughly 70% of the time, it will stay below here. So the whole idea of this Jade Lizard and the Jade Iron Condor is to also try and capture the credit from the call credit spread side, right? So in case if the market really does stay within the 70% below this strike price over here. Okay, so how do you know how wide should the call spread be over here? So remember, we already know that the short put is around $5 something, so we can definitely go about 5 points wide from here straight away, right? So 582 to 587. So we're going to start off with this first and then work our way around it. So definitely we can start using this Jade Lizard construct with this, right? So if I was to go all the way down, you can see this is how the construct looks like. And on the right hand side, if the market really goes past our call spread, you can get about $228, which is not too bad. And if it stays somewhere inside here, then we're going to get, much more, right? Because this is where the max profit zone is, and this is where we are really targeting to get the profits from. So if you're okay with this construct, then you can definitely put this trade in. Now, if you want to have a higher max profit zone, that means you want to have a higher max profit down here, then what you can do is that you can actually increase the width of the call spread further, right? So let's say, for example, you increase it to about 2 points wide. So total right now, you have a $7 wide call spread, and your total credit is $7.82. And this is a proper construct because right now, even though if the market goes past the call spread, you're still going to get some credit, although not that much, right? As you can see over here, if it goes past the call spread, It's only about $82, but somewhere in the middle, you have about $782. So you have slightly more compared to earlier on with the earlier construct. So there's no right or wrong down here how you're going to construct it. Really all comes down to how you want to build your Jade Lizard. All right, so this is for the Jade Lizard. Now, what if you have a smaller account size? Then you can go for the Jade Iron Condor. So I'm going to remove all this down here, and I'll construct the Jade Iron Condor from scratch again. And we're still going to use the same strike down here, right? So we're going to use 533. So let's just say that you're able to risk about $500 per trade. So if you're able to risk $500 per trade, then straight away you want to adjust your put spread down here to about $5 to $6 wide, right? Because each dollar wide that you stretch is $100 in risk. So if you have like a 5 to 6 point wide spread, it's about $500 to $600. And I'm going to go to 6 point wide straight away. Why I'm going to do that is because I already know that my call credit spread should be at least $1 wide. So as you can see over here, I'm going to go to the same strike at 582 and then go 583, so $1. So remember, if the call spread is $1 wide, I want to see a total credit of more than $1. So right here, you can see it's $1.18. So this is a proper construct. And as you can see over here, this is how the Jade Iron Condor looks like, right? As you can see, the max loss is about $482. So this is how you construct both the Jade Lizard and the Jade Iron Condor. Okay, so now that we know how to construct both the Jade Lizard and the Jade Iron Condor, how can you actually start trading them? So I'm going to share with you two very simple methods for you to use, and you can definitely use them if you are just starting out, right? If you're a beginner. So the very first way is just simply trade according to the Tasty Trade study, right? So method one is to simply just trade how the Tasty Trade team have been doing in their studies. So all you got to do, right, start off by randomly entering at around 45 DTE mark. So for them, the timing is not that important because you're always going to be in the trade. Once you close it out, you're going to put it on again. So they're not too concerned about their entries, right? But if you at the start, you want to at least have a higher chance of the first trade working out, just to at least give you some, boost or confidence, then you can definitely time it, right? Maybe wait until a pullback before you enter it. But other than that, you can just enter it. And the one we want to look at is at 21 DTE. So how you want to do it is this. Once you enter it, right, wait all the way until it's 21 DTE, then you close the trade. Right, once the trade is closed, simply open a new trade and then rinse and repeat. So this trade will always be continuous, and you just put it on over and over again and again. As you can see, we're just doing it according to the Tasty Trade study. Now, the second method would be to time your entry. So if you're not too comfortable always having a position in the market, then this is where you might want to consider method two, where you just simply time your entry. So how do you time your entry? So it's actually also pretty simple. Just wait until SPY has retraced, and then you can enter into the Jade Lizard or the Jade Iron Condor, or you can take a look at the stochastic oscillator and then just wait until it's oversold, and then you can enter into the trade, right? So wait till SPY has retraced or oversold, then enter again around 45 DTE, and then exit at around 40 to 50% take profit or 21 DTE, whichever comes first, and then rinse and repeat, right? So I've had quite a number of people that have asked me before, Davis, but at 21 DTE, I'm at a loss. Should I actually close it out, or should I just hold that, right? Again, if you were to just refer to the Tasty Trade study, you can see that they have just mechanically exited at 21 DTE, regardless if it's a win or a loss. And at the end of the day, it's still a positive result. But if you feel that you have a method that can somehow be better than 21 DTE, then by all means go ahead and then trade your method as well alongside the one that is exiting at 21 DTE, and then see for yourself, right, which result is better. So this way you don't have to guess which is better, but rather you actually have empirical evidence, statistics to show you that maybe your exit could in the long term be better than exiting at 21 DTE. Other than that, if you just want to be mechanical, just stick to their studies, because at the end of the day, you're still going to be getting a positive result. Alright, so this is the Jade Lizard and the Jade Iron Condor on SPY, and it has been doing pretty well for me, so definitely you can go ahead and try it for yourself. By the way, if you like this video, then you're absolutely going to love this next video which I have for you, so go ahead and watch that video right now. Also, if you haven't already gotten your free copy of the Options Income Blueprint, you can do so just by clicking this link down here on your screen, and you'll be able to get it for free. Alright, I will see you in the next video.